matter, for being with us as an panelist and sparing his valuable time for the profession. I also welcome all the learned participants for today's webinar, and hope we all together will learn from today's webinar. And in the end, once again, I thank our panelist and guest speaker of the webinar. Thank you so much. Over to Vinci.
Thank you, sir. So first of all, I would like to introduce our panelist for the day, CA Karthik Mittal. CA Karthik Mittal is a practicing chartered accountant, qualified in May 2017. He is partner in Singla Mandeep and Associates Chartered Accountants since 2017. His areas of expertise include auditing and ROC compliances. So we welcome you, and we would be delighted if you could share a few words with our audience.
Thank you, ma'am. Thank you so much for inviting me to this webinar. I would like to thank Chairman Sir, Shri Anil Kakkarji and Chandigarh branch to inviting me here. Recent changes in companies that are very hot topic these days among the members. I hope Ankit Nagpalji with such a intellect and knowledge will clear these doubts and help us in the coming months to prepare the balance sheets. Thank you.
Right, sir. Thank you so much for your words. So now we have with us our guest speaker for the event, CS Ankit Nagpal. CS Ankit Nagpal is a qualified company secretary and is the proprietor of Messrs. Nagpal and Company, a firm of practicing company secretaries located in Chandigarh. He has rich experience in setting up business in India. He is expert in solving complexities of company law and company secretarial practices promptly and correctly and with an attention to all the details. He is expert in setting up incorporation of wholly owned subsidiaries, including foreign subsidiaries in India, incorporation of foreign company, setting up of branch, liaison, project and representative office, setting up of IT or software company, setting up of STPI, SEZ units, etc. He has handled and served diversified clients such as manufacturers, banks, NBFCs, NGOs, charitable societies, partnership firms, IT companies, and many other companies registered in India and in abroad. So we welcome you, sir, on behalf of Chandigarh branch of ICAI and request you to please proceed with the technical session.
Hello, everyone. A very good evening to all. First of all, I welcome to all the members. And I would like to thank Mr. Anil Kakkar, sir, Chairman of Chandigarh chapter, and other council member, Mr. Karthik Mittal as a panelist, and Vinci Chedda as a panelist. And we all know and aware that every day we are receiving a lot of amendment in the Companies Act as well as recent in LLP Acts also. Hence, we get an opportunity to present the topic relating to the recent amendment in the Companies Act. Now, let's begin our discussion on the topic for which we have gathered here to make it more interactive. If anyone has any query during the session or at the end of the session, we will try to resolve it. I would like to mention here that our focus is on only the major amendment that has took place during the last year, and that has a major impact, without which we cannot imagine company law practices smoothly. So, guys, let's start the discussion. I am sharing my PPT with you. I hope screen is shared to everyone and visible to all.
Yeah,
yes, that's visible.
Okay, perfect. So first notification is basically MC has notified the company's appointment and the qualification of the directors rules 2022 and amend the rule 8 and 10. Basically, ministry has revised the format of the DIR2. DIR2, we all know that is a consent to be act as a director, which is required for the appointment of a appointment of a director in the existing company, and which is also required for the formation of the company for appointment as a first director. Basically, they have put a new declaration in Form DIR2. What is this declaration? Declaration is basically every person who is a nation of a country, we share a land border with India. required additional approval from the Ministry of Home Affairs with effect from 1st June 2022. So basically, this is the new notification which has came on the 1st June 2022. We all know that there are 7 countries who share a land border with India, and any person who is from the country, any foreign person who is from that country who share a land border with India required a permission from Ministry of Home Affairs. So basically, this is the new declaration is added in DIR 2. Whether you required approval from Ministry of Home Affairs or whether you not required a approval from Ministry of Home Affairs, you have to insert this declaration in your DIR 2 format basically. So format of the DIR 2 is revised from 1st June 2022. Please make sure that every professional revise the format of the DIR 2, take into record, and if anyone has anyone want this format, then they can download from my website nagpalandcompany.com. And we all know that consent before appointment as a director, we need a DIN, because anyone we want to appoint a director, we need a DIN. And ministry has also, and we all know that DIN can be applied by way of two mode only. DIN can be applied at the time of incorporation, or DIN can be applied by filing the form DIR 3. So ministry has also put this declaration on both the forms, in DIR 3 as well as SPICE form, in which we incorporate our company in SPICE form. So ministry has put this declaration. If your person is from a nation of a country who share a land border with India, then you required additional approval from the Ministry of Home Affairs before taking DIN and before appointment as a director in the new as well as existing company. So this is the new notification came on 1st June 2022. Now let's go on the second amendment. Second amendment is basically relating to the shareholder. First amendment is relating to the director. Any person who is a foreign national who share a land border with India, then required approval from Ministry of Home Affairs. And in case of shareholder, we all know that by 3 modes we can make a person as a shareholder in the company. First is on allotment, second by way of transfer of share, and third by subscriber of the memorandum. So foreign person who share a land border with the India want to become a shareholder in Indian company, then it required approval from government approval under the Foreign Exchange Management Debt Installment Rules 2019. So basically, I have already told you that a foreign national or body corporate can become shareholder by way of 3 modes. So first, by subscriber of the memorandum. So ministry has amended the Company Incorporation Second Amendment Rules 2022 and amend INC 9 format. Put a declaration in form INC 9 if any foreign national or any body corporate who share a land border with the countries who share a land border with India, then required approval from government approval under the Foreign Exchange Management Debt Installment Rules 2019. So basically, first way to become a shareholder by subscriber of memorandum. So ministry has revised the format of INC 9, and please make I just want to tell you that all know and aware that INC 9 is a automatic form, is generated at the time of incorporation. But this form is not a automatic in case a person does not have PAN, being a foreign national. So this form is a physical form. So please note that, all the professional note that, please take into your record a new format of INC 9 in which this declaration is required, whether you required or whether you not required a government approval. Second way, I have already told you that first, by subscriber of the memorandum, a shareholder can become a shareholder on subscriber of the memorandum, and a person who is a foreign national or a body corporate can become shareholder by way of allotment. So ministry has also revised the company's prospectus and the allotment of the securities rule 2022, in which they put a declaration in PS4. PS4 is basically the private placement offer letter. If we all in a daily routine, we are going to make a private placement, and daily routine we are going to issue a private placement offer letter if we want to allot a further share during the year. PS4 is basically the private placement offer letter in which ministry has revised the rule, and they put a declaration in part B. This is basically in the format of PS4. They put a declaration in part B after the serial number 7. Whether you required approval or whether you not required approval, if you're foreign national or a body corporate from a country who share a land border with India, which country share land border with India, then required approval. If not, then not required any approval. So second case is allotment. First case is by subscriber of the memorandum. Second by allotment. Third by transfer of share. So ministry has also come up with a new notification and amend the company's share capital and debenture amendment rules 2022, in which the format of SH4 they have revised, because we know that whenever we are going to transfer from resident to non-resident, then we have to enter into a deed as per section 56. For the transfer of the share, we have to enter in a deed which is signed by the subscriber and which is signed by the transfer and transferee duly stamped. So basically, ministry has put this declaration on SH4 also. Please, all professional, please note that the format of SH4 is also revised with effect from 1st June 2022, in which they put a declaration whether you required approval or whether you not required approval. So basically, the main intent of the ministry is basically if your person want to become a director, then require, if your person want to become a director, and if that person is from the country which share a land border with India, then approval from Ministry of Home Affairs is required. And if person is from a nation which share a land border with India, and he want to become a shareholder in the Indian company, then approval from government, approval under the Foreign Exchange Management Debt Installment Rules 2019 required. So basically, this is the main intent, to put the restriction on the foreign national who share a land border with India, whether he want to become a director, then required Home Ministry approval. If that person want to become a shareholder, then approval is required under the Foreign Exchange Management Debt Installment Rules 2019. So please, all professionals, make sure that format of INC 9, format of SH4, format of PS4, format of DII2, all has revised now. So please take in your record, and if anyone want this format, you can easily download, or you can directly WhatsApp to me. My phone number is there. I mail and WhatsApp to the formats to you. Third amendment is basically a very general in nature. I am not going into detail because already we are getting late. My focus is on basically the LLP amendment and second on Schedule 3 amendment. So introduction of the LLP Act 2021, basically. This notification came basically after the 15 years of waiting, because every day we are receiving amendments, but in LLP normally we don't receive any amendments. But this LLP amendment came after waiting of 15 years, basically, because we all know that if any form or return is not filed within the due time, then penalty of 100 rupees per day as per section 69 of LLP Act 2008 without any limit is going on, without any upper cap. If you have not filed any annual return and delay is involved more than 400, then fees would be 40,000 as per LLP Act 2008 and as per section 69. But now ministry has revised this whole fee structure by way of introducing the LLP Amendment Act 2021, which is basically put on the Rajya Sabha on 4th of August. I am just, because we are already getting late, I am again saying that. So I am just cut down all this content and try to understand in very layman manner. So basically they put this on Rajya Sabha on 4th of August 2021, then in Lok Sabha on 9th of August 2021, and then finally got the president on 30th August 2021, and it became an act on 30th August 2021. But as per MCA notification dated on 11th February 2022, it appointment date and effective date is 1st April 2022. Basically, what does it in this act? Basically, they have reduced the provision of penalty, decriminalization the offenses, recognizing the concept of startup LLP, introducing the concept of small LLP, introducing the concept of small LLP, empowerment of the special court, and appointment of adjudication officer, basically, to compound the offenses, which was the provision in the Companies Act, but not in the LLP Act. So basically, this is the crux of the LLP Act. Major highlights. What are the major highlights of this LLP Act? Basically, focus on ease on doing business by introducing the concept of the startup LLP. Startup LLP, we all know the word startup company, but we don't have heard about the name of startup LLP. So basically, ministry has introduced the concept of the startup LLP, which will be introduced to promote the business rather than going to the proprietorship and partnership by extending the simplification of the regulation. So basically, ministry has introduced the concept of startup LLP and small LLP, which was not there in the LLP Act 2008. Small LLP is basically in the earlier Act 2008. All LLP will be on the same platform, whether that is a zero revenue turnover or whether that is in crore revenue turnover. The penalties are same, the compliances are same, but now they have divided into two categories, small LLP and big LLP, same as in our Company Act. Remove the fear of criminal prosecution. Basically, so many section in the earlier LLP Act, in the so many section, criminal offenses are specified, criminal prosecution are specified, but ministry by introducing this act has removed these criminal offenses. Empower the central government to prescribe the accounting standard and auditing standard for class of LLP. Establishment of the special court by speedy trial of the offense in which imprisonment is involved, basically. Power delegated to RD for which power delegated to RD for compounding of the offenses which are compoundable with fine only. Basically, fine can be compounded by the RD as in the company law. Change the definition of the resident of India. We all know that resident in India is person who stay in India for more than 182 days or during the immediately preceding 1 year. But ministry has changed the definition of resident of India for the purpose of LLP Act only. They reduce the period from 182 days to the period 120 to 120 days. So now if any person who stay in India for a period of 120 days, then he will be treated as a resident for the purpose of LLP Act only. Concept of small LLP. What is the definition of small LLP? We all know that there is a concept of small company. I also will provide the description on that. Small LLP is basically the LLP whose contribution does not exceed 25 lakh rupees and whose turnover does not exceed, as per the statement of account and solvency, not exceed 40 lakh in the immediately preceding financial year, and the LLP who satisfy both the condition of 25 lakh rupees contribution and 40 lakh rupees turnover, then it will be treated as a small LLP. Basically, introduction of the small LLP concept is basically to lesser the compliance burden, to lesser the fees burden, which was not in the earlier act. So basically, ministry introduced the concept of small LLP. Basically, an introduction, startup LLP, I have already told you that also introduced the concept of small startup. Introduction of the accounting standard. Accounting standard was not applicable for which is specified in companies, not applicable. So basically, they have implement some accounting standard for LLP also. Section 34A has been inserted, which state that central government in the consultation of National Financial Reporting Authority constituted under Section 132 of the Companies Act may prescribe the standard of accounting and standard of auditing for a class of LLP, basically as recommended by Institute of Chartered Accountant of India. Compounding of offense, which was not there in LLP Act 2008. Section 39 was substituted in LLP Act, and this section stated as RD may not officer not below the rank of the officer authorized by central government. RD may compound any offense which involve fine only. Basically, every application for compounding of offense shall make to the registrar and shall forward to the RD for the compounding. Basically, so compounding offense was introduced. Introduction of accounting standard, introduction of small and startup LLP, establishment of special code. I have already told you that LLP amendment has inserted the section 67A. 67A is a new section after the section 67, which relates the provision of establishment of the special code for the speedy trial for in which imprisonment is involved. Basically, in which cases imprisonment is involved, they introduce the concept of special court, like in the Companies Act. Transferring of the pending case, all the pending cases in which fraud, in which criminal prosecution is involved, they have transferred all the pending cases to the special court after introduction of the special court. Ministry-wide notification dated on 11th February. I have already told you that LLP Amendment Act 2021 introduced LLP Amendment Rule 2022. Basically, same as LLP Act 2008 and LLP Rules 2009. So basically, Ministry has revised the LLP Amendment Rule 2009 into LLP Amendment Rules 2022. This is also the important provision. Section 17 has been substituted in the company's amendment at 2020, and Rule 19 is basically introduced, in which direction basically where the LLP is directed by central government to change in name. This is basically the obligation on the LLP. If any LLP is if any LLP name is similar to the existing LLP name, or similar to the existing company name, or similar to any registered trademark of a proprietor, then they give power to that owner to file an application to central government within 3 years from the date of incorporation of that LLP to give the direction to change its name basically. So this is the new provision introduced in NLP Act. If suppose you have applied for any registration of LLP and you got that registration and you apply that name which is already similar to some other LLP, or which is a which is basically the registered trademark of any proprietor basically. So you can anyone whose name is similar to your LLP, whose trademark is similar to your LLP, they can file an application to central government in Form 23 and within 3 years of incorporation of the LLP basically, and you directed to change your name within 3 months from the date of issue of such direction. And suppose if ROC central government, if RD give the direction to change the name and you are not complying the provision, you are not complying the provision of the registrar or not complying the order, then RD will direction to the registrar for change of name by suo moto. Registrar will allot a new name to you with the bracket as non-compliant LLP. They will show, and you have to show this, and you have to show that non-compliant. Basically, registrar will allot new name. First of all, registrar आपको एक नया नाम दे देगा. Then he will also show in the bracket as a non-compliant LLP, and you have to show that new name as well as non-compliant LLP in all the official publication, in all the letterhead, in all their basically correspondence, official correspondence. You have to show that new name along with non-compliant LLP basically. So, but nothing in this section to prevent LLP to subsequently change in name. You can change the subsequently and make as a compliant LLP from the non-compliant LLP. So this is also the major amendment. If any registered proprietor of the trademark, or if any LLP is going to think our name is similar to your LLP and you have registered your LLP, then they can make an application to the RD in Form INC 23, and RD will give the instruction to you, please change your name. And if you are not complying the order of RD, then RD will give direction to ROC to change allot a new name with the abbreviation mentioned as non-compliant LLP. And you have to show in your all your official correspondence and publication. But you can change that name in future at later date at any time to become from non-compliant to as a compliant LLP. So this is also the major amendment. Section 76. Section 76A has been introduced, in which basically Section 76A is relating to the adjudication of the penalties. Adjudication of the penalties, which was not there in earlier act. They have introduced the rule 37A, B, C, D. Basically, adjudication of the penalties means central government may appoint any officer not below the rank of the registrar to adjudicate the penalty in case your partner or LLP is not complying any provision or not complying the provision of the LLP Act, and any person agree by the order of the AOA. AOA mean registrar basically. We can say adjudicating officer. If you are any person agree by the order of AOA, can make an appeal to the RD within 60 days of the order of adjudicating officer in Form 33 LLP ADJ basically. Registration of appeal and disposal of appeal. Basically, if RD think it fit in order, they may allot a serial number to you and accept your application. If RD not think your appeal is not in order, then they can decline by recording the reason in writing basically. This is basically the major amendment, and we can say the big amendment in the LLP Act is basically amendment in Rule 5. Fee structure has been revised. I think I have already told at the initial conversation of LLP Act 2021, Ministry has revised the Section 69. Basically, Section 69 is basically the penalty provision in which provision of delay fine is specified 100 rupees per day of any return of any document which is need to be filed with ROC, 100 rupees per day without any upper cap. But Ministry has amended the Rule 5 in which fee structure has been revised. Basically, they have divided into two categories, small LLP and LLPs other than small. I have already told you the concept of small LLP. Small LLP is that जिसकी टर्नओवर जो है वो 40 लाख से नीचे है और जिसका कंट्रीब्यूशन 25 लाख से नीचे है, and whatever the LLP satisfy both the condition, then it will be treated as a small LLP basically. They for any kind of appointment, change in designation, if your LLP is a small LLP, the fees would be 50, and for other than small LLP, the fees would be 150. This is basically the fee structure for filing of LLP forms. Basically, if your contribution is less than 1 lakh, then 50, 100, 150. Basically, they have divided into the category as in the Companies Act Section 403 of Rule 12. Earlier, the maximum fees was 200, but now they have divided into category, and maximum fees would be maximum fees they have specified 600. For incorporation, maximum fees in the LLP Act would be 5,000 in LLP Act 2008, but now the fees would be maximum 25,000 according to their contribution. This is basically the slabs of the delay. If you have delay in filing of any form, then the fees would be implemented according to like in the company law. The main difference is that basically if you have delay of any annual return, suppose if you have delay of annual return of 400 days, then the fees would be 40,000 as per the LLP Act 2008. But as per this act, the fees would be basically maximum 15 times, delay of up to the delay of 360 days, and beyond the delay of 360 days, 10 rupees additional fees will be levied on your form basically. Suppose I told you the example, I am giving the example to you. If you have delay of any annual return of more than 400 days, then the fees would be 40,000 as per LLP Act 2008. But as per LLP Act 2021, the fees would be 15 times of normal filing fees. Suppose if any document fees is 100 rupees, then 15 times is basically 1500 basically. And I am saying that delay is 400 days. It means 360 up to 360 days, the fees would be 1500, and up from the delay of 360 to 400 for 40 days, the fees would be 400 more. It means 1900 fees would be levied on your any failure to file annual return or delay of involve more than 400 days. But in LLP Act 2008, the fees would be 40,000. But as per this LLP Act, as per this LLP Amendment Act, your fees would be 1900 if you have delay of filing of any LLP returns of 400 days basically. So this is the major difference and huge difference in term of penalty basically. Ministry has basically introduced we all know that Second Amendment Act 2022 has launched P3 portal. We all know that all the offline forms will become online forms by introducing the V3 portal, and we have already faced a lot of technical glitches in the V3 portal, but Ministry by launching this portal will make all the offline forms as online forms basically. In the following are basically the major highlights. I am just go through these amendments basically, because our focus is on basically on Schedule 3 amendment basically. So while launching the V3 portal, in form Philip, the basic detail of the designated partner can be fetched from the data locker base. As in the SPICE form, basically LLP formation has become web-based like SPICE form. Longitude and latitude is required for the address of the registered office, which is compulsory to mention. It shall be Form 9, consent to be act as a partner will be become a web-based. Earlier it was an offline form physically signed by the partner, but now the Form 9, consent to be act as a partner, will become a online form. As Form 9 has become a online form, then digital signature will be required for then all partner digital signature will be required. Earlier only the one DSC is required. अगर हम किसी LLP को बनाना चाहते थे तो खाली हमारा एक DSC से हम अपनी LLP बना सकते थे. But now if we want to form the LLP, then we required a DSC of every designated partner or partner if we want to form the LLP. Form 8 will include the disclosure of contingent liability, and Form 24 जो basically हमारा closure का होता था strike of LLP का, उसमें physical statement of account assets liability लगती थी, nil assets liability statement of account basically from the auditor. But now they have removed that statement of account. they have not removed. They basically provide this information in the form itself. So now you need not to submit your statement account as a nil asset liability in a physical form. Now that information is filled in the form itself, basically. Basically, they have done these amendments because they want all kind of incorporation will become all kind of closure of LLP, and all kind of annual return will be filed on a real time basis. While launching of V3 portal, some of the incorporation amendment are there. Earlier, maximum 2 DIN can be applied in the Philip form for the incorporation of the LLP, but now you can apply maximum 5 DIN for the incorporation of the LLP in the Philip form. And certificate of the incorporation is issued in Form 16. Before amendment, there was no provision of the PAN 10 while incorporation of the LLP, but now PAN 10 will be allotted, will be mentioned in your COI as in the company formation basically process. In Rule 24 and 25 is amended. This is just general amendment. Basically, if your LLP is in a liquidation process, then IP can sign your Form 8 and Form 11 instead of designated partner. Earlier, there was no provision of liquidation of the LLP. There was the provision of liquidation of LLP, but there was no provision of IRP and RP can sign, because we already know that if any LLP or company goes into liquidation, then IRP and RP will take over the management of that company or LLP. Then he will only the authorized person to sign and certify of any annual return or any financial statement to file with ROC. Form 28 and Form 29 is relating to the foreign LLP. Foreign LLP, basically they have merged Form 28 and Form 29 together. Now Form 29 is not required. Only Form 28 is work for us. Form 28 and Form 29 are two different forms. Form 28 is for basically the LLP incorporated outside India, and Form 29 is basically for the LLPs whose principal place of business in India. For any change in the authorized person in India or any change in the principal place of business in India, Form 29 is required. But now they have merged the Form 28 into 29. Now for change in the document, change in the foreign, change in the document or designated partner of foreign LLP, as well as in the principal place of business in India, they have merged the two forms into the one. Now both information will be filed in Form 28. Basically, we all know that foreign LLP and foreign company is that company who is incorporated outside India and having a place of business in India as per the definition. Electronic filing of the document. If you receive any objection, then new form has launched, Form 32. You can file this form. This provision was not in the LLP Act 2008. Basically, if you receive any objection, like in same like in the company, GNL 4 is there. GNL 4 is relating to addendum. If you receive any objection from the department and you have to file that objection or that document in only, then you can file that document or that information in Form GNL 4 in the Companies Act, in Form 32 in LLP Act now. CSR, introduction of CSR. This is also the big amendment. Basically, CSR, basically, ministry has notified the company's amendment rules 2022 has introduced a new provision. Basically, eligible companies is defined under section 135 of the Companies Act. What are the eligible companies? Whose net worth is basically more than 500 crore, whose profit is more than 5 crore, and whose turnover is more than 1000 crore is basically the eligible companies who have to contribute at least 2% of average profit of last 3 years into the CSR activities. So basically, ministry has launched a new form, CSR2. This is basically the report in form of CSR2. Basically, this is a physical form. When it was launched in the year 2020-21, the company shall have to file CSR2 separately after filing the form AOC 4 and MGD 7. But after the financial year, basically for this financial year 21-22, if we are talking about this financial year, this form is not a physical form. This form is not to be required to be filed separately, CSR2. This form is basically is required to be filed as an addendum with the AOC 4 MGD 7 for the financial year 21-22. So basically, CSR2 is the physical separate form only for the year 2021, but not for the year 21-22. 21-22, this form is basically filed as an annexure to the director report or as an annexure to the as an addendum to the form AOC 4 and MGD 7. Next amendment, introduction of the accounting standard. Basically, ministry has also come up with a notification on 23rd June of 2021 and introduced the company's accounting standard rules 2021 with effect from 1st April 2021. Central government has prescribed some specified the accounting standard 1 to 5 and 7 to 9 and 29 recommended by the Institute of Chartered Accountant of India. Basically, every company other than the company on which Indian accounting standard is applicable under Indian accounting standard rules 2015, and we all know that India's is applicable on a company whose turnover net worth more than 250 crore are applicable on its auditor shall comply the accounting standard in the manner specified. Accounting standard is basically applied for the preparation of the financial statement. We all know that, and this is on apply on every company. This is basically divided into division 1, division 2 and division 3, basically 3 category. For division 1 is basically for accounting standards rule 2006. For division 2, I think it's for Indian accounting standard 2015, and division 3 is applicable for preparation of the financial statement of the NBFC basically. So introduction of the concept of the small and medium sized companies, basically under the companies accounting standard rules 2021, they have defined the definition of small and medium sized companies. What are the small and medium sized company? Basically जिसकी सिक्योरिटीज लिस्टेड नहीं है, चाहे वो डेप्ट है या इक्विटी है, एंड विच आर गोइंग टू बी लिस्टेड ऑन स्टॉक एक्सचेंज, that it means unlisted public companies are called as small and medium company, and who are not a bank, who are not a institution or an insurance company, and whose turnover does not exceed 250 crore in immediately preceding the accounting year, and whose borrowing does not exceed 50 crore immediately preceding the accounting year, and who is not a holding subsidiary company, is basically a small and medium enterprise, small and medium company. Small and medium company is what? Basically जो लिस्टेड नहीं है, जो बैंक है या इंश्योरेंस कंपनी है, जिसकी टर्नओवर 250 करोड़ से नीचे है, या जिसकी ब्रोइंग 50 करोड़ से नीचे है, या जो होल्डिंग या सब्सिडरी नहीं है किसी और कंपनी की, उसे हम स्मॉल मीडियम साइज कंपनी बेसिकली बोलेंगे अंडर द अकाउंटिंग स्टैंडर्ड्स रूल्स 2021. This is also the big amendment. Rule 4 has deleted. We all know and aware that every professional, while doing the meeting, annual meeting, while approving their accounts in the, we all know that annual account is approved by the board of directors, and every time every professional is asked whether we can approve this account by VC, whether we approve that director report and financial statement by VC. So, but in before 15th of June 2021, there was no provision of approval of annual account by VC. But after this amendment, Rule 4 has omitted by the ministry. Now you can approve your accounts by VC also. Mean there is a 5 agenda which cannot be dealt through VC. In the earlier in basically if I am talking about 15 जून 2021 से पहले आप ये 5 businesses जो है आप VC के थ्रू नहीं कर सकते थे अपनी बोर्ड मीटिंग में अप्रूव. But now you can dealt these 5 businesses, you can approve these 5 businesses through VC also with effect from 15 June 2021. Suppose if for the financial year 21-22 की अगर हम बात करें, if you want to approve your annual account through VC, then you can approve your annual account basically. And CA, this is the notification. This is also a very important notification. This notification is related to basically your audit report. First of all, I just want to tell you one thing. There is no specific format of audit report as per the Companies Act, because there is a lot of ambiguity in the mind of the professionals कि audit report format has changed. Audit report format has changed. First of all, I want to tell you that there is not any standard or specific format specified in the Companies Act. We just have to prepare our audit report as per section 143 and as per rule 11. We just have to give the disclosure as per section 143 and rule 11. There is a not specified format in the format of the audit report in our Company Act. So basically ministry has amended the rule 11. Rule 11 is relating to basically section read with section 143. Rule 11 of the audit and auditors rules 2014 has amended basically. We all know that other matter to be included on the audit report. Is there any column of the other matter to be included on the audit report? So basically ministry has amended that rule 11, and other matter to be included in audit report, they have insert some clauses and they have delete some clauses. As per the amendment, clause D, we all know that clause D is relating to the SBN, specified bank note, that has come on the 8th of November 2016 and 30th of December 2061. So this is basically the 2016 notification, and now already 5 to 6 years has been lapsed for this notification. So now there is no relevance of clause D and no relevance of disclosure of SBN. So ministry has deleted the clause D, specified bank notes clause. but they have inserted a new clause E, F, and G with effect from 1st April 2021. So please make sure that while drafting the audit report for the financial year 21-22, you have to consider all these amendments. Clause D was omitted, and clause E, F, and G. These three new clauses were added in your audit report under other matter to be included. Basically, what are these points? Clause E. Clause E has basically relating to just clause E. Basically, ministry has inserted clause E, F, and G. E is related to basically whether management has represented that to the best of the knowledge and belief, other than as disclosed in the notes to accounts, no fund has advanced or loan or invested to any no fund has advanced, loan, or invested by the company or in any other person or entity, including the foreign entity, with the understanding, whether record in writing or otherwise, that intermediary shall whether directly or indirectly lend or invest in other person or entity identify in whatsoever by on behalf of the company is made ultimately beneficiary, or provide any guarantee or security on the behalf of the ultimately beneficiary. What does it mean? Suppose ABC, three entity. A has given a loan and advance and invest into the B entity, and B has given that loan, advance, and invest into the C entity on the behalf of A, basically, or for the purpose of A. Mean A cannot give directly to the C. There is some maybe obligation A cannot give directly to the C. A can give the loan to B, and B give it to the C for the purpose of it A. So now, as an auditor, this is the additional responsibility on the shoulder of the auditor to check this kind of transaction also. If A has given it to the B and B has given it to the C for the purpose of A, basically on the behalf of A, then you as an auditor, you also have to check this kind of transaction and insert in your audit report, basically. And what is the meaning of clause E2? E2 is basically the person who is receiving. The receiving person is here basically C. Clause E2 disclosure is for C who is receiving the money, basically. Clause E1 is basically A has given to B and B has given to C for the purpose of A, because A cannot give directly to the C. So now as an auditor, you also have to check this kind of transaction. Based on such audit procedure, the auditor has, this is basically the E3 point. Now it's basically you are giving based on the auditor procedure, the auditor has considered reasonable and appropriate in the circumstances. Nothing has come to the notice has caused them to believe that the representation under clause 1 and 2 contain any material statement. So basically, as auditor, you have to give your report. Whether company, clause F, clause E is completed, now clause F is inserted. Whether dividend is declared during the year by the company in the compliance of provision section 123. So now as an auditor, you also have to check whether during the year company has declared any dividend, and if declare, then company has complied the provision of section 123, whether that dividend is transferred into the separate account, whether that dividend is distributed according to the compliance of the provision of section 123. So now as an auditor, you also have to check the dividend provision. You also have to check auditor dividend provision in your audit report. Clause G. Now we have already discussed clause D is omitted as in your audit report. Clause D is relating to SBN, that is deleted. Clause E basically relating to the loan, advance, and investment and guarantee and security. And clause F is relating to the dividend. Clause F is relating to the dividend. If dividend is declared, then you have, as auditor, you have to check. Clause G is basically relating to the accounting software. As an auditor, this is not applicable for this year. I will tell you, ministry has basically by notification delayed to the 1 more year. But for the next year, or as an auditor, you also have to check. The company has used the accounting software for maintaining the books of account, which have a feature of audit trailing facility, and same has been operated throughout all the year. and all the transaction recorded in the software. An audit trail feature has not been tampered with. An audit trail has preserved by a company as per the statutory record for the record retention. So as an auditor, with the company's audit and auditor second amendment rules 2021, with the notification dated on 1st April 2021, the applicability of above clause G was delayed up to 1st April 2022, but with another notification dated on 31st March 2022, which will be in the next slide, another notification on 31st March 2022, ministry has delayed to one more year from 1st April 2023. So for this year, this is the relaxation to you, but from next one, from 1 April 2023, as auditor, you also have to check whether the audit trailing facility is there, whether that is operated throughout the year, whether that audit trailing feature has not been tampered or disabled. So as auditor, this is also the new responsibility. As auditor, you have to check this. Amendment dated on 24th March. This notification is basically relating to the earlier notification in the audit report, basically changes, but relating to the clause G. E is applicable for this financial year 21-22 while drafting the audit report. E and F is basically applicable from this financial year from 21-22. But for clause G, that is applicable for the financial year 23-24, not even 22-23 basically, because that is delay for one more year up to 1st April 2023. Manner of the book to be kept in electronic mode. This is basically in the rule 3 of company's account rule. Basically ministry has come up with the 3 notification dated on 24th March. First notification is dated to company's account rule. Second notification is dated to company's auditor and auditor rules. Third notification, they have changed the schedule 3 for while take into consideration that schedule 3 we will make our financial statement basically. So ministry on 24th March 2021 has changed the company auditor and auditor rules for which we are going to make audit report. Ministry has revised the company account rule, and ministry has revised the schedule 3 for which while taking into consideration of schedule 3 we will make our balance sheet. So now on 24th March, ministry has revised company account rule. This on 24th March, company has amended the rule and inserted a proviso, provided that for the financial, this is the management responsibility, provided that for the financial year commencing on 1st April 2021, mean 21-22 की बात कर रहा है ये. Every company which use accounting software, we all know that every company is using accounting software, whether that is a nil turnover company, everyone is maintaining their data in accounting software. Every company which use accounting software for maintaining its books of account shall use only the accounting software which have a feature of audit trailing of each and every transaction, and created that added log of each transaction made in the books of account along with the date when the change were made. If you have changed any, then it will be recorded in that software, and ensuring that audit trailing cannot be disabled during the year. This is the management responsibility by the proviso 3. But with I already told you that with applicability on 1st April 2021, the applicability of sub clause was delayed to 1st April 2022, and with the notification dated on 31st March 2022, because we are, as a professional, we are not prepared for this kind of drastic change. So with notification dated on 31st March 2022, the applicability of sub clause was further delayed to 1st April 2023. So please, it means कि while drafting the audit report for the financial year 21-22, clause E and F will be taken into consideration, but clause G is not applicable. Even while drafting the audit report for the financial year 22 and 23, clause G audit trailing is not applicable for auditor to check this. This applicable for the financial year 1st April 2023 and 4. So audit report I am not saying format. The disclosure to be made in the audit report is basically what are the disclosure required for the financial year 21-22. The same disclosure will be required for 21-22 for the time being now. Ministry has come up with another notification that God knows. But for the financial year 21-22 and 22-23, the audit report disclosures are same, but with effect from April 2022 for the audit report for the financial year 23-24, the audit report, the clause G will be inserted basically, in which audit relic provision were made there. This is the basically the rule 8 of company's account rule. This two new matters to be included in the director report. So basically director report format, I am not saying director report format, director report disclosure are same as in the previous year, but they ministry by notification add 2 more disclosure in the director report. Basically they have revised the they have revised the rule 8 and introduced a 2 new disclosure. One disclosure is basically the detail of the application made or any proceeding pending under the Insolvency and Bankruptcy Code 2016 during the year, along with their status at the end of the financial year. Mean, if there is any IBC proceeding started or pending, in the director report you have to mention the status. If no IBC proceeding, then you can write down simply during the year there is no IBC proceeding held during the year basically. This is the one clause. And second new clause they have added in the director report, the detail of the difference between the amount of the valuation done at the time of OTS, one-time settlement. When company is not able to pay the loan, then one times we are generally go into the one-time settlement with the bank, and valuation done while taking the loan from the bank or financial institution along with the reason thereof. It means you have to give the reason. What are the valuation when the loan was taken and what is the valuation when the OTS were done. So in the director report, 2 new disclosure were added in rule 8. Rule 8 is basically the disclosure mention for which we will prepare our director report. So 2 new disclosure relating to, one is relating to IBC, second is relating to the one-time settlement with the bank. But this rule 8 is not applicable on small companies and OPC. Now the definition of the small company is changed. We all know that earlier the definition of small company is basically whose turnover is not exceeding 2 crore and whose paid up capital does not exceed 50 lakh. That is the small company. But now the limit is increased. Limit is increased for the paid up share capital is 2 crore and turnover is 20 crore. So now if you want to check the category of if you are in a small company or a big company, then you first have to check your turnover is less than 20 crore and your paid up is less than 2 crore, then only you will be treated as a small LLP. So, small company. So small company, this disclosure will not applicable. For small company and OPC, rule 8 is exempted, because while drafting the director report, we have to consider rule 8A disclosure, not rule 8. Rule 8 is for basically for the company other than small and OPC. So this due disclosure is required for big companies, not small companies. Small company के ऊपर ये 2 clauses applicable नहीं है. You don't require to give disclosure of IBC and OTS information. Now amendment relating to the schedule 3. So basically I have already told you that there is a 3 amendment on the same date. First, company's auditor and auditor rule has revised. Second, company account rules were revised. Third, amend the schedule 3 basically. Schedule 3 amendments were defined. Amendment in the schedule 3 of the Companies Act 2023. Basically, what are the amendments? As an auditor, we have already given a lot of disclosure in our in balance sheet, because while drafting the schedule 3 already we are giving so much disclosure, but ministry by notification dated on 24th March 2021 has inserted more than 20 new disclosure in your financial statement. So while drafting the financial statement for the period 21-22, please make sure that these disclosure are in your financial statement. So as an auditor, we have to give this disclosure in our balance sheet. So earlier, if auditor will take 1 or 2 or 3 hours for finalization of the balance sheet, but now the time will be double in while drafting the financial statement for the year 2021 and 22. So here are the some of the disclosure. First, disclosure of the shareholding of the promoter has been inserted in the notes to accounts under the heading of the share capital. Disclosure of the disclosure of the promoter's shareholding. we have already given the disclosure regarding the shareholders holding more than 5% as per the earlier as per the Companies Act. But now ministry in this notification dated on 24th March has also inserted the shareholding of the promoter. First of all, we have to know about what is the definition of the promoter, because before giving the disclosure, before giving the detail of shareholding of promoter, we first have to know about what are the promoters. So basically, there is a lot of ambiguity. Promoter, generally we are thinking about promoter is whose name mentioned in subscriber of memorandum, who formed the company. Basically, we are treating that as a promoter. But this provision was as per the Companies Act 1956. But now in Act 2023, the definition is given under section 2 subsection 69 of the Companies Act 2023. So now the promoter will be defined under the law. Promoter is mean whose name is mentioned in the prospectus, whose name is mentioned in the annual return, who is the major shareholder or a major director. Basically, if you have defined any person as a promoter in your annual return, then that will be treated as a promoter. So now you as an auditor, you have to give the disclosure of the shareholding of the promoter also. And change, if any change is held during the year, you also have to mention that earlier this percentage was this, but now the percentage is this. And this disclosure is for each class of shares, not for only for equity. This disclosure is for equity, preference, cumulative preference. This is for each class. We have to give the disclosure of promoters separately. Under the heading of the non-current asset, the word tangible asset has been substituted. Basically, the word tangible asset has been substituted with the word property, plant, and equipment, because ministry has changed the tangible asset into the property, the word with property, plant, and equipment. So please make sure that while drafting the financial statement for the financial year 21-22, please take into consideration of these all disclosure. First, shareholding of promoter. Second, they have changed the heading from tangible assets to the property, plant, and equipment. Third, this is also very important disclosure and important amendment, because aging of the trade payables. Now, earlier we just have give the disclosure of trade payables more than 6 months or less than 6 months or any other manner. Changing right now, they have divided the trade payables into the four category according to their age: less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. Now they have divided into 3 category, and they have divided into according to their age into 4 category, but they have divided into sub more category: MSME, other, disputed due MSME, and disputed due other. Now, as a auditor, you have to check what are our trade payable which is less than 1 year, which is more than 1 to 2 years, and which is more than 3 years. But here is main important point. If you have filled the information here under the column of MSME, then we as a professional, we must aware that we have a new form MSME 1. MSME 1 is basically the half yearly return which company need to be filed if there is any outstanding due of more than 45 days, and that is a half yearly return. And as an auditor, if you fill any information in this column, please reconcile that you have filled the same figure in your MSME form. So this kind of disclosure as an auditor you have to give in your balance sheet while drafting financial statement. So if you have filled any information in MSME, then please cross verify and reconcile with your MSME 1 if company have filed MSME 1. So this whole disclosure is basically for to increase the transparency in the hand of the stakeholder. Now stakeholder can easily check कि हाँ trade payable खड़े हैं इतने 2 साल से नहीं पे हो रहे, 3 साल से नहीं हो रहे, क्या provision बनाया. अब earlier auditor will give the in their audit report there was no MSME due in the audit report in their during the year, but now you cannot give. Now you first have to check, then you have to give in your audit report कि there is a no due during the year relating to the MSME. Change in the aging schedule of the trade receivable. Earlier divided into the 4 aging according to the four age group, but now they have divided the trade receivable into the 5 category. They have also inserted the category of less than 6 months. Less than 6 month one, second is 6 to 1, 1 to 2, 2 to 3, and more than 3 year. And these 5 aging schedule divided into 4 subcategory. Undisputed trade receivable considered good, undisputed trade receivable considered doubtful, disputed trade receivable considered good, and disputed trade receivable considered doubtful. So as auditor, you have to check what are the trade payables, and what stakeholder can easily check कि why these trade payables are standing for 2, trade receivable are standing 2, 3 year, and what company has done for the recovery of this basically. So this will increase the transparency in the hand of stakeholder basically. Additional regulatory information has been inserted in Schedule 3, which bring up the following disclosure by the company. Disclosure for the title deed of the immovable property not held in the name of company. Basically, whatever the property, immovable property, which is not held in the name, other than lease and lease property, disclosure, as a company, you have to give the disclosure of every immovable property which is not in the name of company. So there is basically the schedule, mentioned in the Schedule 3. What are the immovable properties that are not held in the name of company basically. Second, disclosure for revaluation of the fixed asset and CWIP, capital work in progress, age wise, whether revaluation is based by the valuation done by the register valuer, because whatever the valuation defined in our Company Act, it means the register valuer, which is defined under section 2 under rule 2 of register valuation rule 2017, and as per section 247 of the Companies Act 2013. So basically, whatever the revaluation you have done, that revaluation will be as per the company, as per the rule 2 of company, as per the register valuer. And disclosure regarding the revaluation of the fixed asset and CWIP, any work in progress, you have to disclose separately in your balance sheet. Revaluation is normally and generally done to increase the value of the asset basically. Disclosure for the loan and advances as granted to promoter, director, KMP, and other related party. First of all, the question is raised whether we can give loan to the director. This is basically the major big question in the company law. Under section 185 is applicable. Practically, loan to director is not allowed under section 185, but there is some exemption notification dated on 5th June 2015 and on 30th June 2017, which is applicable on the private company. But normally, if we are talking about company cannot give loan to the director. So disclosure regarding the loan and advances given to the promoter, director, and KMP and other related party. If you have given any loan to the director, then you have to disclose in your as an additional disclosure in your financial statement. Disclosure for the registration of the charge, satisfaction with the registrar of company beyond the statutory limit. If you have not registered the charge within the time, have not satisfied any charge within the time, then you have to put this disclosure beyond the statutory limit. If you have registered any charge, then you have to give disclosure in your balance sheet. Disclosure for detail of the Benami property held by the company under the Benami Act. If you have held any property, and if any property is basically under the proceeding of in this act, then you have to give the disclosure of the Benami property held by the company. Disclosure for the declaring willful defaulter by the bank and the financial institution. Willful defaulter is basically the category under which bank will insert it to you. If you are not able to pay the liability of the bank, then disclosure regarding the willful defaulter of the if bank and financial institution put into the category of willful defaulter, then as an auditor you have to check and take the representation letter from the management and disclosure regarding the willful defaulter. Disclosure for the compliance with the number of layer of companies. Number of layer of companies defined under section 2 subsection 87 of the Companies Act 2013. Compliance with the number of layer of companies mean as per section 287 subclause 87, A can give A subsidiary is B and B subsidiary is C. Only maximum 2 layer is allowed. But if C is the subsidiary of D, then that is not allowed. Yes, how in any in A की जितनी मर्जी सब्सिडी हो सकती है, A की B C D E F जितनी मर्जी हो सकती है, लेकिन A की अगर B है और B की C है तो only That is the compliance as per section 287. If C has also a subsidiary of D, then that is a non-compliance as per the section 287, because maximum 2 number of layer of the companies is allowed. Disclosure for the following 11 ratios. Now, as auditor, you have to calculate as per calculate this ratio as a numerator and denominator, whatever the ratio. You have to disclose this 11 ratio in your schedule 3 in your while preparing your balance sheet for this financial year 21-22. Reconciliation of the gross net asset carrying amount of each class of asset, gross and net carrying amount of the each class of the asset. If we have done any revaluation during the year, and reconciliation of the gross and net carrying amount of the each class of asset, basically gross amount and net amount ka reconciliation of the each class of asset. Reconciliation between the quarterly, monthly statement of the stock as per the book and submitted to the bank, and also given the reason for the material change. We all know that when we take a working capital loan from the bank, then we have to submit a quarterly return of the stock की quarterly return हम banks को submit करते हैं normally. Now as auditor you have to reconcile the quarterly and monthly statement as submitted to the bank and as per your book. You have to reconcile, and if there is any material changes, then you have to give the reason why this material changes happen. Disclosure with the relation with the stock of companies. Why they have give the company have to give disclosure of the stock of companies? Because normally and generally stock of companies are shell companies, and our company may had done any investment, and the company has not filed their returns and become a stock of company. So disclosure regarding the stock of companies, you also have, as auditor, you have to give the relation with the stock of companies. What is your relation with the stock of companies? Disclosure for the compliance with the approved scheme of arrangement. If any merger or any takeover is done, then you have to give the disclosure for the approved scheme. Disclosure for the utilization of the borrowed fund and share premium. If any, basically you as auditor, you have to give the disclosure regarding the utilization of the borrow fund, where the fund is utilized, and share premium. Disclosure for the transaction not recorded in books of account. Basically, undisclosed income is raised during the year. Undisclosed income is assessed by the income tax department. Then as auditor, you have to give the disclosure regarding that undisclosed income. Disclosure for the CSR. What are the amount need to be spent, and what are the unspent amount is during the year. So as auditor, you also have to give disclosure for the CSR. Disclosure for the cryptocurrency, virtual currency used by the company. If during the year we have purchased any cryptocurrency and we have invested into the cryptocurrency, then company has to give the disclosure of the cryptocurrency. Rounding of the figures in the financial statement is now mandatory. Earlier it was the optional provision, but now it is the mandatory for every company to make the rounding off. If your turnover here is not mentioned, I am just elaborate here. If your turnover is less than 100 crore, then you have to make rounding off into the 100 in lakhs, or in 100, in 1000, or in lakhs. If your turnover is more than 100 crore, then you have to make rounding off into the lakhs and crores. So basically, this is the new provision. Earlier, it is optional. It is only applicable mandatory provision for on which company Indian Accounting Standards Rules 2015 is applicable, but now it is mandatory for the every company. If your turnover is less than 100 crore, then you have to make round off into the 100,000 in lakhs. And if your turnover is more than 100 crore, then you have to make round off it to the lakhs and in crore. Disclosure for the current maturity. Basically, disclosure for the current maturity against the long-term loan shall be disclosed separately. You have to disclose this current maturity. Earlier, we will disclose into the other current liability or any short-term liability, short-term loans. But now you have to disclose against the long-term loan and as a separately. You shall disclose separately during the current maturities, if any. Disclosure for the security deposit to be given under the head of other non-current asset in place of long-term loan and advances. Basically, now you have to show it under the head of non-current asset in place of long-term loan and advances. Disclosure for the utilization of the borrowed fund other than for the purpose which was borrowed if any loan, if any amount is borrowed and it is used for any other purpose, then you have to give the disclosure. Disclosure for the revaluation of the plant and equipment by the registered valuer. Revaluation is normally done to increase the value of the asset, and if any revaluation is done, then disclosure regarding the revaluation for the property plant by the registered valuer. Disclosure for the intangible asset under the development age wise, basically we have to give disclosure of the tangible asset. Disclosure for the borrowed fund for the purpose of further lending, investment, guarantee, security to the third party. This disclosure is related to our audit report, point number E, basically. Disclosure for the borrowed fund for the purpose is for the purpose of which is lending, for the purpose is to given to the other person, basically third party. MCA wide notification dated on 20. Basically, these are the 20 and 25 disclosures which we have to give while drafting the financial statement for the year 21-22. So please make sure that Benami property, cryptocurrency, number of layer, ratios, title deed, revaluation, loan advances, charges if you have registered any charge beyond the limit, Benami property. Now as an auditor, you have to check all this disclosures. Now come up the next amendment. MCA wide notification. Now come up the next amendment is MCA wide notification dated on 25th Feb 2020 has amended the CARO rules 2016 and replace it with the CARO rule 2020 with effect for the financial year 19-20. So basically ministry has revised the CARO 2016 into the 2020. CARO 2020 is applicable to every company, including the foreign company, as defined under Section 2, subsection 42. Foreign company is that company is incorporated outside India having a place of business in India. So CARO 2020 is applicable on every company, including foreign company, except banking company, except insurance company, except Section 8 company, except OPC and small company. Small company, I have already discussed the small company. Small company is a company which turnover is less than 20 crore and paid up is less than 2 crore. That companies are small companies. So this is also not applicable on small company and OPC and Section 8 and insurance and banking. And this is also not applicable on private company, not being subsidiary or holding company of a public company, having paid up and reserve and surplus not more than 1 crore rupees as on the balance sheet, and which does not have borrowing 1 crore rupees from any financial institution at any time during the financial year, and which does not have any revenue specific disclosed in Schedule 3 exceeding rupees 10 crore as per the financial statement. So now there is a big question. They said कि small company के ऊपर ये नहीं लगेगा CARO 2020. इन्होंने एग्जाम्प्ट कर दिया स्मॉल एंड ओपीसी को, एंड स्मॉल कंपनी की जो आज की डेट में जो डेफिनेशन है वो 2 करोड़ और 20 करोड़ है. बट दे सेड कि प्राइवेट कंपनी पे भी नहीं लगेगा जिसकी टर्नओवर जो है वो 10 से ऊपर ना हो, जिसकी पेडअप जो है वो 1 करोड़ से ऊपर ना हो, एंड जिसकी बोरोइंग जो है वो 1 करोड़ से ऊपर ना हो, और जो सब्सिडरी ना हो, होल्डिंग ना हो पब्लिक कंपनी की बेसिकली. सो नाउ देयर इज अ बिग क्वेश्चन कि दे सेड कि स्मॉल कंपनी तो एग्जाम्प्ट है, बट यहाँ पे स्मॉल कंपनी की जो डेफिनेशन की जो लिमिट है वो 2 और 20 है, पर जो प्राइवेट कंपनी भी निकल रही है यहाँ पे जो एग्जाम्प्ट हो रही है जिसकी 10 करोड़ से ऊपर टर्नओवर ना हो, जिसकी पेडअप 1 करोड़ से ऊपर ना हो. सो नाउ द क्वेश्चन इज अराइज, we have to check the limit of 1 10 crore or 2 crore 20 crore. So here it is my interpretation, as per my observation, it is not applicable on small company. So now the limit would be 2, 20 and 1. Mean 1 crore loan from bank financial institution and 2 crore is basically paid up and 20 crore is basically turnover, while applicability of the CARO, it mean ki now we have to check the limit of 220, not 110, because they have exempt the small company. And this kind of ambiguity is because this CARO rule has came before the small company definition. ये कैरो की जो रूल्स आ गए थे ये हमारे पास पिछले साल आ गए थे, बट इन्होंने 1 साल के लिए इसको डिले कर दिया था अप्लाई करने के लिए. सो बट इन द मीन वाइल स्मॉल कंपनी की डेफिनेशन आ गई और उसमें लिमिट्स उनकी बढ़ गई 2 और 20. सो नाउ एज पर माय ओपिनियन द स्मॉल कंपनी पे नहीं लगेगा. तो वाइल चेकिंग द कैरो हमारी जो लिमिट्स है वो 1-10 की जगह हमें उसको चेक करना है 2 और 20 बेसिकली. as this is already, I have already told you that with the notification dated on 24th March, the applicability of CARO was delayed for the financial year, delay to the financial year 2021. With another notification on 17 December, the applicability of CARO was further delayed for the financial year 21-22. So now from this year, this CARO will be applicable, but as the small company is exempted from the preview, so the limits will be checked for 220 instead of 1 and 10. This notification is very general in nature. Basically, earlier in the when we all know that application for the closure of the application for removal of the name of the company from registrar of company will be in the form of STK2. We will file the STK2 to the ROC, in which we can get the closure of our company under section 248. But earlier they have just little bit they have changed in the rules. They have changed, if you have received any deficiency, then registrar can ask to submit the form within 50 days. Basically, in earlier law there has not specified the number of resubmission, but why this notification ministry has prescribed the number of resubmission. So maximum 2 number of resubmission is allowed, and ministry has come this notification. Earlier there was not specified in the law how many resubmission is allowed while making an application for the closure of the company in STK2 under section 248, but now they have specified in the section that maximum two resubmission is allowed while making an application in form STK2 basically. I have already complete all the latest amendments, but I will after this basically this 2 notification will also take into consideration. This notification is also very important and relevant to us. I am just taking 5 more minutes if the panelist will allow. I just will take 5 more minutes to complete this 2 notification.
Sure, sir. You may please go ahead.
This 2 notification is basically, we already have discussed the launching of the V3 portal, V3 portal for LLP basically. But ministry has come up with the notification dated on 15th August basically. Ministry has come up with the notification dated on 15th July. 15 जुलाई 2022 को मिनिस्ट्री नोटिफिकेशन के साथ दोबारा आते हैं, जैसे कि हमारा एलएलपी पोर्टल जो है V3 पे जा चुका है, बट MCA will धीरे धीरे हमारा जितने भी कंपनीज के फॉर्म है, they will also put into the V3 portal. Right now, company filing portal is V2 portals. So after introducing this this amendment on 15 July 2022, ministry has also launched and announced the 9 forms on MCA V3 portal. Basically, ministry has basically from physical filing of this form into the online filing, ministry has basically announced these 9 forms into the V3 portal basically. So existing forms were disabled with effect from 15 August 2022. As per MCA, form will be available on 31st August 2022 at 12 AM. The forms are basically, the ministry has basically 9 forms which were from the offline into the online. They in the V3 portal: DIR 3 KYC, DIR KYC, form DPT 3, DPT 4, GNL 1, CHG 1, CHG 4, CHG 6, CHG 8, and CHG 9. So basically, these 9 forms were also launched by the ministry on V3 portal. So now this offline form of these 9 form will not available right now on companies master data. They will available on V3 portal basically. Offline is web-based form, like in LLP. All the form will become online forms. Physical verification of the registered office. This is just recent. We have received this amendment. So basically on 18th August 2022. Ministry has introduced the companies incorporation third amendment rule 2022. Third time they have amended the incorporation rule and inserted the rule 25B for physical verification of the registered office after the existing rule 25A. So ministry has basically revised and amended the new rule 25B. Basically section was there in before this amendment. रजिस्ट्रार बेसिकली रूल 25B आने से पहले हमारे पास सेक्शन में ये वर्डिंग थी. सेक्शन 12 सब सेक्शन 9 में हमारे पास इसकी वर्डिंग थी. वी हैव ऑलरेडी द वर्डिंग ऑफ सेक्शन 12 एंड सब सेक्शन 9. which is basically inserted by the Companies Amendment Act 2019, dated on 31st July 2019, with effect from 2nd of November 2018. So basically, we have already provision was there for physical verification of the registered office, but there was no rule which specified the process how we can do the physical verification of the registered office. हमारे पास सेक्शन में प्रोविजन तो था कि if registrar has reasonable cause to believe that company is not carrying business and operation, he may cause a physical verification of the registered office in any manner as may prescribed. And if default is made in complying of any subsection, he may, without prejudicing the provision of section 8, initiate the action for removal of the name as per section 248. Basically, we have already the provision in by the Companies Amendment Act 2019. There we have already the provision of section 12 and 19. If registrar को लगता है किसी भी reasonable clause पे कि कंपनी अपनी बिजनेस ऑपरेशन नहीं कर रही है, तो वो किसी की भी फिजिकल वेरिफिकेशन करवा सकता था, लेकिन इसके रिगार्डिंग कोई रूल नहीं था जो हमें प्रोसेस बताए हाउ दिस फिजिकल वेरिफिकेशन विल बी डन, मतलब कैसे इस फिजिकल वेरिफिकेशन को कर सकते हैं। इसका रूल जो है मिनिस्ट्री ने नोटिफाइड किया 18 अगस्त 2022 को बाय अमेंडिंग द रूल 25B बेसिकली। अब रीजनेबल क्लोजेस कौन से होंगे, व्हाट आर द रीजनेबल ग्राउंड for which physical verification of the registered office by the registrar can be done. Basically reasonable clauses काफी सारे हो सकते हैं, ये मेरी इंटरप्रिटेशन है कि ये reasonable clauses हो सकते हैं, but other than these lot of other grounds may be, like company has not filed their annual return for 2 and 3 years, like company has failed to file the commencement of the business under section 10 in form 20A, like company has not filed the registered office address with ROC within 30 days of its incorporation, like if any notice or letter issued by the authority and it returned back to the authority, mean कोई person ही नहीं मिला उस documents को receive करने के लिए, and company has made any non-compliance with the provision of the Companies Act, and for any other reason where registrar suo motu can physical verify the registered office or any complaint made by any person or stakeholder. So these are the reasonable clauses where physical verification of the registered office can be done by the registrar. So basically, as per my interpretation, these are the reasonable clauses, but there may be more grounds and more reasonable clauses be there for which a registrar can do the physical verification. So by introducing the rule 25B, ministry has specified the process how they can do the physical verification. Basically, we have the section 12(9), but there was no process and procedure specified in the rule, but by notification on 18th August, ministry has specified in the rule 25B how they will do the physical verification of the registered office. As per rule, the registrar may cause the physical verification of the registered office of the company as per information available on MCA portal. The registrar shall visit the registered office in the presence of the 2 independent witness of the locality. जहाँ पे हमारा registered office है, वहाँ के कोई 2 independent witness with said registered office is situated. उस पे visit करेगा 2 local persons के साथ, independent witness के साथ. Registrar shall carry the document which you have already filed on MCA portal, which you have filed in MCA portal on form 22. तो registrar जो है वो सारे document carry करेगा and will check with your original documents that you have in your registered office. Registrar shall take the photograph of the registered office while undertaking the verification, whether the board is there, whether the SIN is printed, whether the address is printed, whether the website is there, whether the email ID and phone number is mentioned. So all these registrar will check. Registrar shall thereafter prepare a report on the physical verification as per the format provided in the rule. Basically, they will prepare the report in which they mention what are the person is available and name of the person, and they will also prepare the report whether the original document is matched with the document they have filed in form INC 22. So they will prepare the report on the basis of that. The rule further stated that where registered office of the company is found is not capable of receiving all the communication and the notice, the registrar shall send a notice to the company and all directors of his intention to remove the name from the registrar of the company and requested them to send their representation and copy within the 30 days of the notice to take further action. Basically, if registrar को लगा कि आपका registered office वहाँ पे setup नहीं है, तो वो आपको notice भेजेगा. Because under section 248, one of the ground of the removal of the name, one of the ground of the strike of your company is section 12 and 9 if your registered office is not set up by the company. So one of the ground is mentioned under section 248, and registrar can strike off your company, remove your name company from the master data if you are not maintaining your registered office as per the section 12. So I would conclude my presentation with the thankfulness of all the members for their patience. I hope the presentation was thoughtful to all and would make able to aware about the recent amendments. And if anyone has any query relating to these amendments, you can ask me. So I am able to give to the resolve to all the queries. If anyone has any queries, now open for me. Now hand over to Mr. Karthik Mittal ji or Anil Kakkar sir.
Sir, there's a query in the chat box.
Okay.
So this says that first of all, the session is informative and thank you. It's regarding the rounding off. If the amount is rupees 432, then
Okay.
we have to show 4.32 or 4. And in the top of the financial statement, is it necessary to mention amount in 100 or amount rounded off to nearest 100? Please clarify.
Yes. You have to mention in your top of the top of the financial statement. आपको mention करना पड़ेगा कि ये मैंने 100 में करी है और amount nearest to 100 करी है. Basically अगर आप इन्होंने मेरे से जैसा कि क्वेश्चन है कि 432 को अगर हम डिवाइड करते हैं. हेलो.
हाँ जी, यू में कंटिन्यू.
ओके. तो बेसिकली आपके पास दोनों ऑप्शन है. आप इसको 4.32 भी कर सकते हो और इसको 4 भी कर सकते हो. बिकॉज बड़ी कंपनीज में जहां पे हमारे पास काफी ज्यादा हमारे पास ह्यूज नंबर्स में हमारे पास वो होती है अपना अमाउंट्स होती है, तो वहां पे हमें जो हमारा डिफरेंस होगा उसको हमें ऊपर नीचे बेसिकली थोड़ा सा प्लस और माइनस करना पड़ेगा. तो यू कैन डू इट एट 4 and 4.32 ऑल्सो बेसिकली.
Okay, thank you. And there was another question, query earlier that can you please share this PDF on chat box?
Okay, definitely I'll share this PPT.
Okay, any other member, if there is any query, then you may please raise now. I think there are no other queries.
Okay.
So I think we can conclude. And first of all, thank you so much for such an informative session. So sincere thanks to you for sparing the time and making your presence. And thanks to our panelist also, CA Karthik Mittal. And well, there's another excellent session compliment for you, sir, by Mr. Anand Sabharwal. And just, I think one query which we have got is in 1 in 10 crore limit, there is borrowing limit of rupees 1 crore.
Yes.
It is there, right?
There is borrowing limit. Yes, borrowing limit is 1 crore. But while checking the applicability of CARO, you can take the small company definition help 2 or 20. बिकॉज इन प्राइवेट कंपनी उन्होंने एग्जाम्प्ट जो किया है, उनको कहा है कि 1 करोड़ अगर आपकी पेड अप से 1 करोड़ से नीचे है और 10 करोड़ से नीचे अगर आपकी टर्नओवर है तो आपके ऊपर कैरो उन प्राइवेट कंपनीज पे भी नहीं लगेगा. बट लेकिन स्मॉल कंपनी की जो डेफिनेशन है उसमें जो लिमिट्स है वो 2 and 20 है. सो वी विल टेक द एडवांटेज ऑफ दैट. सो व्हाइल अप्लाइंग द कैरो you will have to see the 2 and 20 paid up and turnover of small, but borrowing limit is 1 crore while checking the applicability of CARO basically.
All right, there's another query that in ROC filing, rounded off figures are to be given. What about income tax filing? How to resolve this issue?
Basically, in income tax you can do anything. आप because उसमें आपको पूरी फिगर ही पंच करनी पड़ेगी जितनी मेरी नॉलेज है. Because I am into the company law parts, I am not in income tax ITR filings. But income tax में आपको पूरी फिगर ही उसमें इंसर्ट करनी पड़ेगी. You cannot fill you can fill. I think वो लेता ही नहीं है राउंडिंग ऑफ. जितनी मेरी नॉलेज है वहाँ पे राउंडिंग ऑफ चलती नहीं है. वहाँ पे आपको पूरी फिगर ही डालनी पड़ेगी.
इनकम टैक्स में आपकी नहीं फिर पूरी डालनी बिल्कुल वो पूरी डालनी पड़ेंगे जिसमें इनकम टैक्स में ना जी।
इनकम टैक्स में पूरी ही डालनी पड़ेगी।
So,
टू बैलेंस शीट तो
Yeah.
नहीं कह सकते हम, उसमें ये है कि एक बनी हुई कि आपको बस एक 100 से डिवाइड करके जो हमने बनानी है, दूसरी हमने नॉर्मल
हाँ।
उसको बनानी है, बस ये
दैट
रहेगा
इज करेक्ट, बिल्कुल थोड़ी मेहनत ज्यादा लग जाएगी।
ऑलरेडी सर disclosures we have already lot of disclosures is being there, so ऑलरेडी आपका टाइम ज्यादा ही लगना है इस बार की
Yeah.
ऑडिट रिपोर्ट और बैलेंस शीट बनाने में।
नहीं पापा जी पूछ रहे हैं which one to sign, we have to sign according to company law ना जी।
डेफिनेटली सर,
हाँ, बिल्कुल जी।
वी हैव टू
तो
साइन
अंकित जी
अकॉर्डिंग टू।
एक और चीज बताएं, आपने कोई सैंपल।
हाँ जी,
यस यस अंकित जी, अगर आपने कोई बैलेंस शीट और या नोट्स ऑन अकाउंट कोई सैंपल फॉर्मेट अगर आपने बनाया हो तो आप हमें शेयर कर दें, सो दैट वी कैन शेयर टू द मेंबर्स एट लार्ज।
definitely I will I can show first, I will show into the screen so that I think
Yeah.
member can easily visible I hope screen is visible to everyone.
जी जी
it's
बिल्कुल।
visible.
So this is basically the additional disclosure we have added in our financial statement for the for this financial year basically. Additional regulatory information. First is about title deed of the immovable property not held in the name of the company. We have discloses ki what are the properties which are not held in the name of the company, and company has not revalued any property, plant, loan advances to its promoter director. We have mentioned the schedule like this. Capital work in progress according to the age wise CWIP aging schedule basically. Any project work in progress or project completely suspended. The same is basically intangible assets under the development. Detail of Benami property, detail of the Benami property, amount and detail of a beneficiary. Borrowing from the banks and financial institution in case of security of the current asset. Basically जो current asset में आप quarterly जो stock statement देते हो उसको reconciliation जो इसमें है. Willful defaulter relationship with the stock of company. Registration of the charge and satisfaction of the charge beyond the limit. इसमें mention है कि nature क्या है, amount क्या है, reason क्या है. रेशो का एनालिस है इसमें प्रॉपरली, न्यूमिनेटर एंड अकॉर्डिंग टू न्यूमिनेटर एंड डिनोमिनेटर, and compliance with the layer of the company, utilization of borrowed fund, undisclosed income, CSR, detail of cryptocurrency, compliance with the proof. Normally, generally, if we have a small company, these detail are just blank. Clause is not applicable. Company has not invested in traded in cryptocurrency. CSR provision is not applicable. Each and every entry properly accounted in books of account. Neither there any undisclosed and nor any surrender by income tax. As per the information and explanation provided by management, company has not given any loan and invest fund to any person. So basically, these all disclosure is in there basically in the format. Compliance with the approved scheme and arrangement. So basically, these are the 15 to 20 disclosures that we have put into the financial statement. Just is in this financial statement, I will definitely share with you, sir. But this financial statement just rounding off is pending to do this. So when our team will done this rounding of work, then definitely share with you final format in 1 or 2 days. Over to you, sir.
Right, sir. I think it would be great if you can share the format once it's updated. That would be really helpful.
Definitely.
Yeah. So if there is any other query by the members, they can raise the same.
Actually, we can request to the members अगर उनकी कोई query होती है तो with the permission of अंकित जी, तो वो डायरेक्टली अंकित जी से मेल से या फोन से पूछ सकते हैं। अंकित जी आपसे कोई मेंबर की
Definitely, sir.
query है?
Definitely. Anyone can any query.
ठीक है, थैंक्स अ लॉट जी, थैंक यू जी। ठीक है, कैरी ऑन मिंसी।
हाँ जी, so I think thank you, sir, Ankit ji, for the such informative session, and you have explained all the amendments in detail along with the practical aspects. So such an informative session. I would also like to thank our panelists, CA Karthik Mittal, And along with that, thanks to all the members who have joined the seminar and made their presence to this. And I would also like to thank Chairman of the Chandigarh branch, CA Anil Kakkarji, and all the members of the managing committee for their efforts towards this session. With this, we conclude this seminar.